Hello everyone, this is Crypto BitLaw, back with another blockchain legal brief, and today we're going to discuss how a proposed law will change how cryptos are taxed and digital assets are taxed in the United States, in addition to altering the securities rules as they pertain to cryptocurrencies and other digital assets. But before we dive in, as always, if you like this content, please hit that like button and subscribe to our channel. We'd really appreciate that. And with that said, let's dive right on in. All right, so here we can see that Decrypt reports that a bill from, quote, Bitcoin Senator Lummis would alter capital gains landscape for crypto. The Responsible Financial Innovation Act is still being drafted. Lummis staffer Tyler Lindholm told Decrypt what's in it. So let's take a look and see what's in this thing. Senator Cynthia Lummis has been working on the Responsible Financial Innovation Act since last year, and it touches upon taxation and securities rules as they relate to cryptocurrency. They say a new bill from Senator Cynthia Lummis, a Republican from Wyoming, seeks to overhaul how cryptocurrency can be taxed within the United States. Lummis's state policy director, Tyler Lindholm, told the Decrypt Daily podcast that the Responsible Financial Innovation Act, which is still being drafted, will provide clarity to the industry and users. One of its biggest aims is to provide guidance about capital gains related to crypto mining, staking, and spending. What we're really looking at there is just integrating digital assets into the system of taxation. Capital gains represent the increase in value from when you purchased an asset to when you sold it. Conversely, capital losses represent a decrease in value. The U.S. taxes net gains on assets such as crypto. The problem that many people unwittingly face, however, is that a whole slew of common instances are, in fact, taxable events. For starters, paying for something in Bitcoin or another coin equates to selling it in Uncle Sam's eyes. So if you bought a Bitcoin when the coin was at $20,000, then purchased a Tesla with the Bitcoin while it was at $35,000, you're going to be hit with capital gains taxes on that $15,000 difference. The bill would do several things on this count. First, it would provide a tax exclusion of up to $600, so crypto users wouldn't be hit with a tax bill for buying the proverbial coffee. While Lummis would prefer it to be higher, according to Lindholm, the exact amount could actually end up being lower. The senator is looking for a bill that can pass the Senate. Second, the bill would clarify that capital gains don't apply to, quote, productive activities such as mining or staking because you're not getting rid of the asset. Mining refers to using computer power to help secure a blockchain network and potentially earn crypto as a reward. Staking refers to dedicating your crypto to a network to increase security and earn passive income. Quote, the current gray area is that you might be accruing a capital gains taxable event under proof of stake as it stands right now, even if you're just delegating, said Lindholm. This isn't theoretical. Internal Revenue Service guidance on this issue doesn't mention staking, but does state that Bitcoin and other proof-of-work cryptocurrencies are taxable as income the day that they are mined. A Kentucky couple who were taxed for Tezos staking rewards have sued the IRS in federal court over the matter. And just of note, as a side remark, we've done a series of videos on the Tezos staking case with regards to the IRS, and we're going to touch on that at the end of this article. But if you'd like to learn more about that case, just check out our videos. They're going to be linked in the description below. They say the bill would also allow people to exit retirement schemes such as 401ks and IRAs and reinvest the money into cryptocurrency without, quote, fancy footwork or a big tax bill. Finally, it seeks to codify Lummis's and Senator Ron Wyden's, a Democrat from Oregon, unsuccessful amendment to the $1 trillion infrastructure bill signed into law last year. According to industry advocates and Senator Lummis, a provision within that bill, which redefined, quote, brokers to include crypto actors, was overly broad. It could be read to require Bitcoin miners and proof-of-stake validators to provide the IRS with tax information of other network users. The Responsible Financial Innovation Act would redefine the term broker to make clear that while exchanges and custodians are brokers, most other actors aren't. Senator Lummis has been very friendly to Bitcoin and other cryptocurrencies during her time in the Senate. According to Lummis, she first bought Bitcoin in 20. So a few points of note. I think that this type of intelligent and informed approach to legislation and policy making is a net positive for cryptocurrency and the digital asset space. I think it's undeniable that the industry has to have some sort of set of rules or regulations that govern how we treat these digital assets, how they need to be taxed, and clearly defined a clearly defined framework that defines what a security is and what securities are not, right? And so I applaud Senator Lummis for actually trying to put in the work and get some sort of bipartisan approach to effectively regulating these digital assets and doing common sense lawmaking and rulemaking, like we heard about in this article, like the proverbial coffee provision, so that if you go to sell, quote, sell, your Bitcoin, when in reality you're just paying for a cup of coffee, you're not going to owe taxes on that transaction. You wouldn't be taxed for the capital gain of the value for which your Bitcoin accrued when buying that coffee. I'd like to see this get broad bipartisan support. I feel like there's no doubt that as this bill shapes out and gets kind of brought up through the committees and everything, there's going to be alterations to it, and nothing's set in stone yet. I mean, it's just still an idea, a bill. It's not even finished drafted. It's just kind of sitting out there in the ether. But if this were to actually become law, I think that a good framework has been laid down by Senator Lummis, who is one of the most pro-Bitcoin digital asset advocates in Congress, in the government. So I think that that's good. And then also, as they mentioned before, it touches on the whole IRS staking case, where the government and legislators are trying to get a unified approach in terms of how to actually treat crypto rewards from mining, staking, and spending. And as we've seen before, the IRS, they're not willing to give an inch in this case. The couple that sued the IRS in the Tezos staking rewards case, the most recent development is that the IRS tried to settle with the couple by giving them a refund for the taxes that they paid that were disputed on Tezos staking rewards, and the couple dismissed that. They said, hey, no, we actually want to go forward with this and actually get a ruling so that we have some sort of clarity, some sort of precedent. But the problem with that is if you get a ruling like that, that pretty much it abdicates and removes the function of the congressional branch and the legislative branch from their domain and puts it into the purview of the judicial branch. And one thing that the judicial branch does not like to do is what's called legislating from the bench, where they create laws through these precedents in cases that have not yet been resolved through codified statutes. So it's the job of Congress and the legislatures to enact laws, right? It's not the job of judges to create these laws. But when there is an absence of clarity, the court systems exist to provide that clarity and interpret existing laws and apply them to unique fact sets. So I think that if this law can get passed through, then it would render what's going on in the IRS staking case, it would render that moot and pointless. And that case would pretty much have no doubt, there would be no doubt that that case would be thrown out if this law were to pass and if it were to clarify the rules on how digital assets in terms of crypto staking rewards are to be taxed. So just some interesting points of note. Hats off to Senator Lummis and the other lawmakers that she's working with in order to try to get this bill moved through and finish drafting this bill. Nothing but respect for her and her team for actually approaching this and taking it seriously and actually trying to do this in a nice, informed manner. So with that said, thank you all for watching. Let me know what you guys think in the comment section down below. We're going to link all the resources and other videos down in the comments, or down in the description rather. And with that said, if you like this content, please hit the like button and subscribe to our channel, and we will see you all in the next video.